Welcome to another video. Today I will be sharing with you a multi-time frame analysis, and most importantly I will be inserting inside of the analysis some very important educational topics that you have to know when you are basically trading, and anyway when you are developing a trading strategy. So the video will be very valuable and I suggest that you watch it until the end. Now, if you're new to the channel, I'm a top author on the TRADINGVIEW platform and I share free education and analysis on all my platforms, so I suggest you subscribe and I will see you in the video. Okay, so what kind of situation do we have at the moment on EURUSD? Let's make a full analysis on the most traded pair in the whole market and see what kind of opportunity we can be looking at on it to be possibly capitalizing on this pair this week or maximum next week. So let's start here from a daily perspective. What do we have? We clearly have a market that is moving inside of this range. So we have clearly very strong support here, again support at this region, support here, and support here. And at the same time, what do we have? We have resistance here, and again we will have strong resistance at this area, because we know that at this point this range is actually confirmed and we want to see the market continue to move inside of this range. Now, as I said in my previous video in which I showed you how to be approaching a ranging market, so what kind of opportunities you have to be looking at when you have a market that is ranging, I will link that video in the description, because we spoke exactly about EURUSD, showing you how when you have a ranging market, you should be looking at potential W and M formations, because they are high probability entry scenarios from a execution perspective when it comes to a ranging market. So I will skip the complete explanation on which opportunities there are in a ranging market, because it's already all covered in my video that is specifically about ranging markets. You find it in the description, but let's speak about the situation that we have at the moment on EURUSD. We have a market that, as we said, is ranging and is creating at the moment this W formation. Now, this W formation, the completion zone of this W formation is exactly this resistance, which is very good. Now, if we go and see what is the situation from a COT perspective, so commitment of traders, what the biggest speculators in the market are doing, so hedge funds, how are they positioned in the market? Now, what we can see that if we look at the net positions have been greatly increasing. We went from minus 114k all the way up to 78k net positions. So definitely a strong increase, meaning that we went from having more short positions than longs to having more longs than shorts. In fact, at the moment we have 171k longs and 93k shorts, with a 70% short exposure and 31.4% long exposure. So at the moment, EURUSD is being bought by hedge funds and big institutions. In fact, we can clearly see that obviously at this area there will be many buy orders that are stacked at this zone, and they already entered the market, and we see this clearly reflected in the positioning in the COT data. So this push to the upside doesn't surprise me at all. It is definitely possible. It was highly possible that the market would have actually respected this support, but at the same time, even a break to the downside would have led to a push to the upside, and then here they would be basically liquidating their long positions for the continuation to the downside. But at the moment, this is what we have: support held, the market is creating a W formation, and from here we can be looking at potential shorting opportunities. Just a quick reminder, make sure you comment below and you let me know which pairs or topics you would like me to analyze or cover in the next videos. Now, before we go and see why we can be looking at shorting opportunities, let's complete our analysis from a COT perspective, we can see that with the last report, yes, it's true, they have added another 2.7k longs, but at the same time, they were already adding shorts. In fact, with the last report, they have added 876 a short position. So what does it mean? It means that overall they're already adding some shorts, and they can easily use this liquidity here for potentially a fake breakout to the upside where all retail traders will start to buy because they buy fake breakouts. And at that point, what will happen? A break to the upside, all the retail traders buy. That is exactly what hedge funds and big institutions need. They will use all the buy orders to actually sell because they have to generate that liquidity. The whole reason for which there are manipulations in the market is because simply hedge funds have too much money to manage and there isn't the liquidity in the market for them to execute the positions. So they can't just click their button and execute the trade. They have to generate the liquidity to actually open the trade, because when you're trading, for every buyer there has to be a seller, and they have so much money that there aren't enough sellers for them to buy, or vice versa. Basically, if you want to sell, there aren't enough buyers, so they have to generate those buyers. And for example, creating a fake breakout to the upside or a spike to the upside, like in this case, you see this spike on lower time frames. This spike to the upside seemed very bullish and everybody starts to buy, and that is perfect because at that point they can sell and the market will make a move to the downside. So the whole point of manipulations is just to generate liquidity for them. This is all to tell you that this is a very important level to be monitoring, specifically after this W formation. So let's go to the point, how we will be monitoring this with students. Now, from a weekly perspective, there is nothing much to say. This is resistance also in the weekly. You can see it here in the past, support, support, resistance. So it's all about execution, okay? How we will be monitoring price action inside of this area with students. Now, as usual, guys, trading is reactive, is not predictive. So what does it mean? It means that just because we want to see the market inside of this area generate a nice shorting opportunity doesn't mean that as soon as the market will reach this area, we will short, right? That is not how it works. We have a very clear rule-based strategy also for entry. So as usual, we take our direction from the monthly, weekly, and daily time frame and checking the COT data. But when it comes to execution, we go down on the 4-hour time frame because it provides way better entry scenarios, because it gives you a bigger risk to reward because you're able to position your stop loss better and take more precise entries. And most importantly, it helps you filter out losing positions. Why? Most of losing positions. Why? Because if here, when the market will approach this area, the market will just continue to push and push and push and push without showing any sign of weakness. Do you think we will actually take the short? Obviously not. We don't just have a short position here. We will be monitoring what price action will do when the market will reach this zone. Now, obviously, I can't share my exact rules for entry. That is part of the mentorship program, but a very simple thing that you can be following is looking at the structure of the market. Until the structure of the market is bullish, so higher highs and higher lows, don't look for a short position. It makes no sense, okay? You don't want to be shorting a bullish market. But in general, how we will be approaching this, we will be monitoring price action on the 4-hour time frame inside of this area, waiting for the market to first shift from a bullish market to a bearish market, and then we will be waiting for the market with students to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities for a move to the downside. And we always take a trade only if we have a minimum 1 to 3 risk to reward. Why? Because if you have a 1 to 3 risk to reward, even if you have a terrible win rate in a month, so let's say that month you take 10 trades, you lose 7 and you win only 3, anyway you will be in profit, and that is your goal as a trader. Even if you have a terrible month, extremely bad luck, bad decisions, anyway you end up in profit. That is your goal as a trader. So we don't take a trade if we don't have a minimum 1, 2, 3. And this is how we will be approaching EURUSD. The first target will obviously be the neckline, so the previous resistance now turned support, if the market will satisfy all our rules inside of this area for this possible shorting opportunity. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis that I share on all these platforms. And also make sure you go and check out the mentorship program. You find the link in the description. It's a very complete program. You first learn all the rules of my strategies and then you trade them live with me. Each and every day I give you a new daily market breakdown showing you exactly how to apply the strategies with entry, stops, and take profit. And I also answer any question that you have each and every day. So it's a very valuable program and very complete, and I suggest you go and check it out, or I will see you in the next video.